All right, roundtable. I wanted to reshoot, or I guess add to the video that I broadcast earlier today. I'm just not really liking the backup program. It doesn't have the same ability to zoom in on my screen the way that my main program does. So I finally figured out at least a short-term workaround. So hopefully this will be easier for you to see. Anyway, here we go. In the first video, we were talking about some of the trade recaps. We went over the euro, we went over the pound, but I didn't talk about some of the other trades that we were looking at. So I'm gonna jump into that. I'm gonna pause really quick to make sure I've got my notes. I've been like deep into technical stuff getting this computer working, so I'll go ahead and pause and we'll get. Okay, so a couple of currencies that we didn't get a chance to talk about in the first video. One of them was the Canadian dollar. The loonie's been moving down pretty strongly back towards parity. You can see it got 11 pips away. I don't know what this low is offhand, but it got very, very close depending on your broker's feed, which actually is where I was expecting it to go. Didn't spend a lot of time down there. Over the 3rd and the 4th, this is the US holiday, this sideways area was about the best it could muster. There's a 2-hour period here on the 4th where multiple, multiple spikes. If we went down on a 15-minute, we would see that price probed down there several times. So we definitely have a nice pool of buyers down here as the Canadian dollar goes towards parity. We're also getting near support on some of the higher time frames. So what I'm looking for here is the Canadian dollar in this uptrend to develop some buying opportunities. I'm looking for trade setups a little bit lower though. I'd like to get in around 1017 to possibly 1015. That's 170, 150. Otherwise, if the market does manage to break out, I'll be looking for a retest of the 200 level. The other currency pair I wanted to talk about, come on, jeez, here we go again, don't show the message. The Aussie yen, this was a trade we were in back around July 2nd. If you remember, I was looking to take profits around the 82 level. This currency has really taken a dive. You can see a couple hundred pips off of the thing, but we do have some support a little bit lower. So this little downtrendy thingy going on here, I'm expecting to continue to push down. Not seeing a lot going on as far as support like we did over here, which of course prompted the buy in the first place. So I want to see the Aussie yen kind of settle down, especially over with this downtrend in play at the moment. Next, I want to talk about some of the commodities we've been following. I know not everybody can trade commodities. That's why I have also talked about this ETF called the JJG. The JJG is a grains ETF. You definitely want to go in, look it up, see everything that goes into trading it. The thing about the ETF market is the ETFs, or exchange traded funds, I'm saying Echo, Tango, Frank, some of them have huge tracking errors. What a tracking error means is this. An ETF, or exchange traded fund, is made up of a bunch of other things. It's kind of like a mini mutual fund. Well, the JJG has in it, among other things, we've got wheat, corn, soybeans. So it has the grains. But just because the grains are going up, that doesn't mean that the ETF has to go up. You've got to take into account the weightings, if any kind of adjustments. You really need to understand how the ETF manager has decided to buy and sell. I mean, it's not just as simple as saying, oh, wheat is going up, so the ETF is going up, or it's not as easy as saying corn is going up, so the ETF is going up. You really need to be more discerning than that. I know, like, everybody hates that we've actually got to think about this stuff, including myself, by the way, but you gotta. Now, you can get away with only trading the technicals over here on the ETF, but here's a word of warning. ETFs gap like crazy. I mean, you look at this, we've got 1, 2, 3, 4, 5. That one actually closed a little bit. 6 gaps just since June, and I could go back and count even more. So again, you got to be careful. ETFs, they gap. Gaps are like the bane of stops. For example, had you sold this short, even if you had a 10-cent stop, you would have wound up getting executed right here at the open at well over $1.20. So you got to keep that in mind when you're trading ETFs. Having said that, though, we've got good uptrends on corn, soybeans, and wheat. I am, however, in the longs here for corn. Because of this resistance zone up here, I am looking to take profits on corn. Wheat is a different story. It has broken out above this uptrend. I'm sorry, Jesus, did that again. Soybeans, it has broken out of its uptrend. In fact, we're just getting into the news cycle for soybeans, so I like the fact that it has already broken out now. Before we're even really into the season for soybeans, corn should be getting harvested right about now, depending on weather. Wheat, like corn, is reaching towards its prior high, its prior resistance level, and like corn as well, is in a short-term downtrend. You can see here over the last couple of weeks. I'm not as happy about taking profits on wheat. I really would have liked to have gotten a bit more in terms of this trend. But the way price is shaping up, we are running into this resistance zone for sure. So again, profit taking is what I'm looking at doing on wheat contracts. If you are trading the JJG, you got to keep in mind soybeans might have enough of an uptrend to keep this bad boy going. But with my profit taking on corn and wheat, if I were long the JJG, which I am not, I prefer to trade the commodities. I would also be taking profits over here.